Assalamu alaikum. We are the members of Group 1 and this is our stock portfolio.
During the 3 months investing, the HANI Celestial Group, or we call it as HANI, shows the loss of 122,342.45 ringgit. However, there are certain reasons why we are still proceeding on to actually investing in this stock. The HANI Celestial Group, or we call it as HANI, is a prominent US company specializing in natural organic products, including food and personal care items. They are operating in over 75 countries, and its diverse portfolio and broad distribution network helps it to become a significant player in the growing organic sector. HANI stock currently holds a exact rank of number 2 by and a value grade of A, indicating that it is considered as an attractive value of stocks. Second, HANI is a company that is currently undergoing a turnaround initiative under new management, aiming for a more focused, profitable, and also growing business. Third, HANI is actively expanding its distribution with snack products, now reaching over $20,000 general store nationwide. This broadens its market access and could drive future sales growth and also the company growth itself.
I choose to invest in AT&T because it's a well-established company in the telecommunications sector that offers stable income through dividends and lower price volatility. As a defensive stock, it performs steadily even during uncertain market conditions, making a safer choice for long-term investors like me. My investment strategy focuses on value and income investing. I allocated 250,000 ringgit, which is 25% of my total portfolio, to AT&T. I bought 2118 units at $27.72 per share, aiming for both capital preservation and regular dividend income. This strategy helps balance out the risk for more volatile stocks like Tesla in my portfolio. After around 3 months, I sold 2,100 shares at $27.8, which gave me a slight loss of 1,408.73 cents, but I still consider it a good investment because AT&T continue to provide dividend returns which aren't included in the profit calculation, and the stock remained very stable throughout the holding period. Overall, AT&T fits my goal of building a portfolio that provides both steady income and long-term growth potential.
So the next stock that we chose to invest in our portfolio is PepsiCo, or PEP. Choosing PEP as one of the stocks in our portfolio was a huge risk that we were willing to take because it is one of the more priciest stocks in our portfolio. But even by just looking at PepsiCo from a surface level, we can see that this company is massive, as it owns multiple top brands like Lay's, Gatorade, Tropicana, Doritos, Mountain Dew, and of course Pepsi, all of which are well known and trendy. Besides that, looking at their performance historically in previous years, the stock price would normally go up during the second quarter of the year, which happens to be within the time that we wanted to invest in the stock this year. And finally, which is the main reason why the stock was chosen, is because PepsiCo is one of the main sponsors of the UEFA Champions League. With big games being played during the time that we invest in the stock, we expected the price of the stock to skyrocket considering the huge number of international audiences who would tune into these matches. So with all these reasons, there was no doubt in my mind that this stock would do well. But unfortunately, not all things go to plan, because after investing about 250,000 ringgit into the stock, we ended with a loss of 39,274 ringgit 90 cents.
We choose Tesla because it is a well-known company with strong potential to grow. Tesla is a leader in electric car and also working on new technology like solar energy and self-driving car. Even though the price goes up and down, we believe Tesla will do well in the long run. Our group used an equal investment strategy. We put 250,000 ringgit into each of the 4 groups. For Tesla, we bought 206 units at $284.65, and later we sold 205 units at $346.46 in late May. Our plan was to buy when the price was lower and sell it when price goes up, so we could make a profit in 3 months. So the profit that we got is RM 52,722.71. Tesla was the only stock that gave us a profit, and it helped improve the total performance of our portfolio.
This chart shows the performance of our portfolio light blue line compared to two benchmark index, which is Nasdaq red line and S&P 500 is green line. At the beginning, all three moved similarly, but in April, both Nasdaq and S&P 500 started to recover and ended with positive returns, around plus 5% for Nasdaq and plus 4% for S&P 500. Our portfolio, however, had more ups and downs. In early May, it dropped sharply, and although it's recovered slightly, it still ended with negative returns about negative 5%. In short, both benchmark index performs better than our portfolio.